In early 2022, one of the largest technology companies in the world experienced one of the most dramatic market reactions in modern history. Meta Platforms, the parent company of Facebook, Instagram, and WhatsApp, lost approximately $40 billion in market capitalization in a single week. According to public earnings reports and market data, the decline followed the release of quarterly results and forward-looking guidance. The event immediately captured global attention. Meta was not a struggling company. According to financial filings, it generated tens of billions of dollars in annual revenue and served billions of users worldwide. For years, the company had been considered one of the most dominant players in digital advertising and social media. Its stock had delivered strong, long-term returns to investors. Facebook's growth story began in the early 2000s and accelerated rapidly. According to company history, its platforms expanded across continents, becoming embedded in daily communication for individuals, businesses, and governments. Advertising revenue fueled expansion, acquisitions, and innovation. By the late 2010s, Meta was among the most valuable companies on Earth. However, financial markets are forward-looking. Investors do not only evaluate what a company has done, they focus on what it is expected to do next. According to analysts, expectations for Meta were extremely high entering 2022. Any deviation from projected growth carried outsized consequences. In its earnings release, Meta reported slowing user growth on its core platform. According to filings, daily active user growth in certain regions had plateaued for the first time in company history. While the company still had billions of users, this shift altered long-term growth assumptions. At the same time, revenue guidance reflected rising costs. According to earnings calls, Meta was increasing spending on infrastructure, artificial intelligence, and long-term projects. These investments reduced near-term profitability. Markets reacted swiftly. Another documented factor was changes in digital advertising. According to public reports, privacy changes on mobile operating systems reduced the effectiveness of targeted ads. This affected advertising measurement and performance. Meta acknowledged these headwinds in earnings discussions. When earnings and guidance were released, trading volumes surged. According to market data, shares fell sharply as investors reassessed valuation assumptions. Within days, tens of billions of dollars in market capitalization were erased. This occurred despite Meta continuing normal operations. The decline demonstrated a core principle of public markets. Stock prices reflect expectations, not just current performance. Even highly profitable companies can experience sharp valuation adjustments when expectations shift. Media coverage intensified the event. According to news reports, headlines emphasized the scale of the decline, comparing it to historic market drops. The narrative quickly spread beyond investors to the general public. Importantly, the decline did not mean Meta ceased to operate. According to subsequent filings, the company continued to generate revenue, innovate, and serve its user base. The market reaction reflected valuation changes, not operational collapse. Analysts later examined the event in detail. According to post-earnings analysis, multiple factors converged: slowing growth, rising expenses, advertising headwinds, and increased competition. No single factor alone explains the drop. The event became a case study in modern finance. Business schools and investment programs began analyzing Meta's 2022 earnings reaction as an example of expectation risk. Large companies are not immune to rapid market repricing. Meta's leadership later adjusted strategy and communication. According to subsequent earnings calls, the company focused on efficiency, cost discipline, and core product improvements. Markets responded over time as new data emerged. The $40 billion decline remains significant because of its speed. According to market historians, such large valuation shifts occurring in days illustrate the power of collective investor behavior. Liquidity, sentiment, and expectations move faster than ever in modern markets. This story highlights a broader lesson. Market value is not permanent. Confidence can change quickly, and valuation depends as much on perception as performance. While Meta remains one of the world's largest technology companies, the 2022 event serves as a reminder. Even dominant firms operate under constant scrutiny. Every earnings report is a test. Every forecast matters. Today, the Meta market drop is remembered not as a failure of technology, but as a lesson in market dynamics. According to documented data, it reflects how modern financial systems process information, risk, and expectation. This case continues to be referenced in discussions of volatility, valuation, and investor psychology. It demonstrates that in public markets, growth assumptions are fragile, and when they change, the impact can be measured in tens of billions of dollars.